With all the news about the Federal Reserve lowering the federal funds rate, I'm getting a lot of questions about how the Ventura market might be affected in the coming months. In today's video, we're going to talk about how the Ventura market is doing today and how some of these upcoming rate changes might shake things up. By the way, my name is Grant Leichtfuss, your Ventura real estate resource. If you're thinking about making a move in the Ventura area, whether it's in 9 days or 9 months, give me a shout. We can hop on a quick exploration call, figure out if we'll be a good fit for each other, and take it from there. My contact information is down below in the description. Back in 2020, the Federal Reserve slashed interest rates to help invigorate the economy during the pandemic. This boosted the housing market, mortgage rates decreased, and home sales increased across the United States. Here in Ventura, home sales spiked in the summer of 2020 and did not slow down as the seasons changed. In December 2020, usually one of our slowest months, transaction volume was up 65% year over year. Lower rates meant higher demand, and higher demand meant that prices continued to rise. This is what we normally see when mortgage rates fall. Rates and home prices usually have an inverse relationship. However, in the years that followed, we saw just how complicated the relationship between rates and home prices actually can be. When inflation began rising and the Federal Reserve began to increase interest rates, demand in the housing market predictably softened. But because rates changed so drastically in such a short amount of time, from sub 3% to nearly 8%, sellers were affected too. Most homeowners locked in a very low interest rate between 2020 and 2022, either because they were purchasing a home during that time or they were refinancing their existing mortgages. The prospect of sacrificing that low rate caused many to hold the line. This created a slowdown on both the supply side and the demand side of the market equation at the same time, so home prices did not reverse course. We did see a short-lived correction last year. Prices pulled back a little bit from peak levels, but after this, we again saw an upward trajectory. Despite persistently high mortgage rates, albeit a little bit better today, this past summer, the Ventura market was bustling and sellers did pretty darn well. Home prices grew nearly 11% year over year in June and about 5% in July. And we set an all-time record for median sales price here in Ventura back in June of $940,000. The number of homes sold in Ventura also grew, reaching 79 homes sold in July, a full 30% improvement over last year. Homes sold relatively fast too, with the median days on market hitting 32 in July. This was slightly slower than the median in July 2023 of 28 days, but faster than the national median of 34. With homes selling quickly and now exceeding boom level prices, demand for homes in Ventura is strong by any measure. Typically, we expect the market to cool down a little bit in the final months of the year. When rates were cut in 2020, this wasn't the case, so a rate cut now could boost market activity into the fall and the winter. On the other hand, people don't like making big purchases right before a high stakes election, so I'm expecting a temporary curtailing in demand. Taken together, lower rates mixed with uncertainty could result in a slowdown typical of our seasonal patterns. Not much better and not much worse. So how fast can we expect rates to come down? Given how costly it has been to buy a house over the last few years, it is definitely understandable that people are eager for rates to begin coming down. However, don't expect rates to plummet like they did in 2020. Experts are saying that it is much more likely that the Federal Reserve will incrementally lower rates over the next several years. Overall, this would be a much more balanced approach, helping ease more buyers into the market without jolting prices in one direction or the other. It will also help ease more sellers into the market, listing their homes once they feel confident that they will be able to afford the purchase of their replacement home. In addition to more existing homes coming to market, we should begin to see more new home inventory too. Homes and condos take time to build, but as rates decrease and inflation improves, the cost of building improves along with profitability. Developers need to feel secure in the stability of the market, so don't expect them to begin building more homes just because interest rates started to come down. Once they see a positive trend line in profitability, expect them to get back to pulling permits and breaking ground on new projects. The bottom line is, expect some seasonal slowness as we approach the election and the holidays, but I fully expect improvement on both the supply and the demand sides of the market equation as the Federal Reserve continues to lower their interest rates. As always, thank you for watching this video. I'm really curious to know, and please let me know down below in the comments, have your moving plans been affected this year because of the election? Let me know, and I will see you on the next video.